Namaste, welcome to Arthaniti. I'm back after a short break with new videos, new knowledge that I want to share with you to help you take right decisions in your investment journey. Please don't get carried away with all the noise that happens on social media with influencers trying to influence your investment decisions. Be aware of your individual needs, your risk-taking capacity, your financial prowess, your goals, and then decide the best suited investment product for you. Correct? I'm here to help you take those right decisions. Now, today I want to focus on insurance. With COVID slowly receding, slowly going away from our lives for good, the need for insurance is far greater than it was ever before. During the last 2 years, when we saw people suddenly passing away, or the hospital bills and the shock the family was left in, looking at the amounts raised by the hospital, the necessity for a good insurance policy has been is more necessary today than it was ever before. But once you enter the insurance market, you will be more confused than being clear. The hundreds and thousands of insurance plans that various companies have to offer, the different nomenclatures that they give to their insurance policies, a new entrant into the insurance market will be more confused than having any clarity as to which insurance policy suits him or her the best. So here I am with a video which will help you understand the must-have insurance policies, right? No frills attached, some plans that you must have in your investment portfolio. Please be clear that this is a guidance that will help you understand whether you have that plan and whether you need to go and buy a plan if you don't have it. Right? Now, the first must-have insurance policy that I'm going to talk to you about is a life insurance policy. Once you start earning, people tend to save money, tend to invest money, try their luck in the stock markets with all the media influencers and the kind of videos that are put up on social media, right? But insurance is one investment product that must not be overlooked. One thing that you should always remember, take it as a thumb rule, a golden rule when it comes to insurance. Like your savings, the earlier you start, the better it is. The same goes on with insurance. The earlier you buy your insurance, the better it is for you. Why am I saying this? Why? Because the earlier you buy, no sooner that you start earning and you buy an insurance, you are at a young age. You are healthy. When you buy an insurance product at a young age, the premiums that you have to pay obviously are lower as compared to when you buy at a later stage in your life. So, always remember the golden rule with insurance. The earlier you buy an insurance policy, the better it is for you. Now, coming to the first must-have insurance policy. As I told you earlier, life insurance is the first policy that you buy. But there are various life insurance policies available in the market. So, which one should your must-have insurance policy be? It is a simple term life insurance policy. No frills attached. A pure term life insurance policy. Now, what does this policy do? It safeguards your family members against your untimely demise. Now, if you are a principal earner in your family, if you are a sole bread earner in your family, this is an important product which you should think of buying on priority once you start earning money. If you have taken a loan, say a housing loan, which the amounts of such loans run into lakhs of rupees, buying a term insurance policy will safeguard your family against the financial burden of repaying the loan in case of your untimely demise. Correct? So, buying a life insurance policy should be top priority once you start earning money. Now, many companies offer returns, investment plus insurance in their life insurance policy. Some are called as endowment plans, some are called as ULIPs. But we understand insurance is not an investment. Always look at insurance as an expenditure which safeguards your interest in case you are no more, in case of your untimely death. It safeguards the interest of your family members. So look at insurance as an expenditure, not as an investment which will help you earn returns. There are many products in the market which give you good, better returns than an insurance product. Correct? So if you are offered, say, an endowment plan or a plan which is sandwiched, like it offers you an insurance plus it offers you some returns, please don't go for such plans. What happens is, say, suppose you pay a fixed premium for buying an insurance policy which offers you returns plus which offers you an insurance. Now, the premium that you pay, part of the premium will go towards investing the money so that some returns are generated out of it. Part of the premium will go towards administrative expenses, which are also in place in case you buy a term insurance policy but are on a lower side. And the remaining portion will go towards ensuring your need. So only a small part of your premium will go towards ensuring, towards the insurance that you actually intend to buy. Instead, if you go in for a term plan, barring a minimal administrative cost that the insurance company will deduct, majority of your premium will go towards purchasing an insurance which will safeguard your financial interest. So never club insurance with returns. If you want returns, go opt for the various investment products that are available in the market. But when you buy insurance, look at it purely from an expenditure point of view. So that is why it is very, very necessary that you start early so that this expenditure is minimal. The younger your age, the lower is the premium that you have to pay. So the first must-have life insurance plan is a pure term life insurance policy that you must buy for yourself. The second must-have insurance plan is a health cover. Now, during COVID, the hospitalizations and the bills, the mountain of bills that were raised by hospitals for treatments of our near and dear ones, like we were in for a rude shock. Say your parents must have bought an insurance policy, say 15 years back, 20 years back, for an amount of say 1 lakh or 2 lakh, 3 lakh rupees. But the bills ran upwards of 10 lakhs or so, if God forbid you had to be hospitalized for COVID and other related ailments. Correct? So insurance cover has to be of such a value that is going to safeguard your interest, not at that moment of time, but say for your life. So take into consideration the inflation, the rising cost of medical expenses, not only in India but abroad. Take all this into consideration and buy an health insurance policy which will safeguard your interest not only today but years to come in the future. Now, coverage in the health insurance plan is something that you should be aware of. Now, take for example a simple cataract operation. If you have to undergo a cataract operation for both your eyes, IRDA, the Insurance Regulatory Authority of India, has set a limit up to which claims can be settled for cataract of each eye. The limit has been set to somewhere around 23 to 25,000 rupees per eye. So you know, if you are going in for such a surgery, that is the amount, and not more than that, that is what you will get from your insurance policy. Correct? One more thing, say now Normally, if you have purchased an insurance policy say a few years back, please be aware or ask your insurance agents about the coverage that they offer. Now, for example, if you are to be hospitalized for some surgery and you opt for a private room which costs around 5,000 rupees rent per day. I'm just giving you an example. And you have an insurance plan of say 2 lakh rupees. Normally, the insurance company offers 1 to 2% of your total policy amount towards room rent. In the sense, if you have a 2 lakh rupees insurance policy, the insurance company will settle the claim only up to 2,000, that is 1% of 2 lakhs towards room rent. So the remaining 3,000 you will have to pay from your pocket. Not only the remaining 3,000, if you opt for a 5,000 rupee private room and your insurance policy is going to settle only 2,000 rupees, which is 1% of your 2 lakh rupees health plan. If the insurance company is going to settle only that much amount of room rent, the whole bill, the whole hospitalization bill will be settled only to that extent. Understand? So for a 5,000 rupee room rent, if the insurance company is going to pay you only 2,000, right? So the remaining, say your hospital bill comes to a total of 50,000. In the same proportion as your room rent, the insurance company will settle your claim. So please be aware about such nitty-gritties, such nuances in your insurance policies before you buy the plan. If you have already bought the plan, please recheck with your insurance agents for these small things before a medical expenditure has to be taken up. One more advantage that the health insurance policy offers is a cashless plan, wherein the insurance companies have tie-ups with various hospitals in various cities, and instead of you paying from your pocket, the insurance company directly settles your bill with the hospital, provided the coverage allows you the amount that is raised by the hospital. So, things that you should take into consideration or should be aware of are the cashless facilities and the hospitals that the insurance company has tie up with, the coverage vis-a-vis various surgeries and hospitalization bills, lab test bills that your insurance policy offers. Be clear about it, have it clarified from your insurance agent, right? And a good enough coverage which is going to safeguard the interest of not only you but your family members, not only today but in a foreseeable future period of time, taking into consideration the inflation and the rising costs all over. Now, in most cases, if you are a salaried person, your company takes care of your health insurance needs. But being into a group plan will only safeguard your interest up to the kind of policy your company has purchased for you. So be aware about who all are covered. Mostly when companies are into cost cutting, say they do not give coverage for your parents, only the immediate family members, your spouse and children are covered, or for certain surgeries the coverage is limited to a certain amount. So be aware about this. Also, even if your company is offering you a corporate medical insurance, it is always advisable that you have your own personal medical insurance policy also. In times of uncertainties, tomorrow, say God forbid, if you lose your job, then your own medical policy will be a safeguard to you and your family for your medical needs, right? So always advisable that even if your corporate medical insurance policy exists, have your own personal policy also. Once you are out of your job, in the sense say after retirement, when you attain, say, the age of 60 or so, buying an insurance plan at that age is going to be very, very costly. So again, for a medical or health insurance plan, the earlier you start, the cheaper it is for you. The third must-have insurance cover that you should have in your investment portfolio is a personal accident cover. Now, first two that I have told you is a pure term life insurance policy, a health insurance policy. The third one is a personal accident cover, a personal accident policy. Now, it fills the gap between a term plan, a term life insurance policy, and a health insurance policy. A term life insurance policy will help you in case of death. For any hospitalizations and medical expenses, your health insurance policy will help you in that matter. But a personal accident policy will help you in case of permanent, total or partial disability, temporary disabilities that you face due to some accident or death due to the accident. So basically what the life insurance and Mediclaim or health insurance does not cover, your personal accident insurance policy helps to cover that gap. So now say accidents are incidences which we are not ready for, right? They occur with there is so much uncertainty about when these incidences will occur. But God forbid, because of these incidences, if you have to face some disability, permanent or temporary or total or partial, your accident cover will help you make good the loss of earning capacity that you face because of these disabilities. Now this cover, again, as I told you, the better you buy, the earlier you buy, the better it is. Why? Because cost wise you will have to pay less. Correct? So personal accident policies are the third type of insurance plans that you must have in your investment portfolios. So now we have talked about term life insurance plan, we have spoken about health insurance plan, a personal accident policy. Last but not the least, the fourth must have insurance policy in your investment profile is that of critical illness, right? You should have a critical illness policy. Now, one obvious question that should pop up in your mind is, if I have a health insurance policy, is there a need for a critical illness policy? Yes, there is. Health insurance will help you pay for your medical expenses in case of hospitalization. In case of a critical illness policy, if you are diagnosed with critical illnesses like cancer, terminal illnesses, life-threatening illnesses like cancer, heart diseases, kidney failures, etc. On getting diagnosed with these diseases, your critical illness policy will pay you a lump sum money. Yeah, it does not pay for the treatment, but it pays you immediately on diagnosis of such illnesses. Now, these illnesses, the treatments for them are quite expensive. You need a lot of money for treating these illnesses. So if you have a critical illness plan that can take care of treatment if you are diagnosed with such illnesses, right? So to sum up once again, the four must have insurance policies: pure term life insurance policy, health insurance plan, then personal accident policy and critical illness policy. The four insurance policies that you must have, the earlier the better. Now, all of us work hard, toil with the aim of earning money, enjoying a peaceful life, getting all the material necessities that are needed to live at a certain level the way you do every day, right? Now, health along with wealth is equally important. Health is wealth. Yes, the cliched saying is very, very true. To take care of your health needs, insurance cannot be ignored. So, if you do not have any of these four must have insurance policies, please go ahead and buy them. Contact your insurance agent, or else, if you need any further help, any guidance regarding these policies, please feel free to write to me below this video in the comment box, and I'll be happy to help you. Take informed decisions, get right information, and go on your investment path to build a healthy portfolio. I'm here to help you achieve that, right? So, see you in the next video. Please like and subscribe to my YouTube channel, and help me help you in your investment journey. Thank you. Thanks a lot.